So the next presentation is on anti-financial crime compliance in digital money. It will be presented by Dirk Findeisen, who is Managing Partner at MSG Rethink. So please welcome with me, Dirk Findeisen.
Thank you. Thanks for being here. Thanks for the opportunity to talk here at this great conference. It's my first time attending this conference. And what I learned yesterday, you either have to be a lawyer, you have to be an investor, or you have to be a founder to be recognized here. So at least I'm not a lawyer. I'm somehow an investor, but I guess more likely is, so I founded my first company in my early 20s. The second, sold it. Found my second company in the 30s, sold it. And now I'm founder of MSG Rethink Compliance, and we think we are practitioners and specialists for anti-financial crime compliance, meaning we try to think how criminals are thinking to use technology and to, let's say, use opportunities to, let's say, get their illicit money into the normal financial system. So that's what we are all about. It's only about anti-financial crime, whatever that is. I will come in a few minutes on that. But we think that at least our purpose is to make the market a little bit fairer by trying to catch the bad guys and also help the good guys to minimize their anti-financial crime risk. You heard by Magnus or from Magnus what kind of risk how easy it is to really run into those risks, whether it's in the fiat system, so the centralized financial system, or whether it's decentralized finance. The risks are similar. They are not identical, but they're similar. So for the next 200 slides, I have a short agenda. First of all, I was asked by Philip to speak about innovation versus regulation. So we had a panel yesterday on that one as well, and of course I would stress about where are we coming from, what is regulation, how is regulation maybe hindering innovation, if at all. And what does it mean in regards to anti-financial crime and your potential risk? So first is taxonomy of money. So it's not mine, it's by the Bank of International Settlements. They came up a few years ago with a sort of taxonomy. And if I'm talking about digital money, I'm not only about talking cryptocurrencies. The way we come from is from centralized finance. It's all the SWIFT system. And moving into digital money quite early because we are very heavy engaged in Africa, in all the African countries. And what you know about Africa is that there's let's say, a very huge unbanked population, which is, by the way, also a chance for DLT usage there. But there's a high density of those smart devices, whether they are smart or not, it's a different story. But at least there is a sort of a device that gives you access to digital wallets. So we supported, or we are supporting a lot of telecommunication companies in Africa because they provide a sort of banking services in a digital way, which is similar to the topics we talk about cryptocurrency here as well. And we started that business and supporting them roughly about 10 years ago. So there is a sort of an experience on how to help companies to, let's say, catch up with regulation and stay compliant. If we talk about anti-financial crime, what is anti-financial crime all about? You heard about AML, KYC from Magnus, and it was also stressed yesterday in some of the discussions. Well, it's also about terrorist finance. So we know that Hezbollah, for example, is using DLT to finance their own organization. And by the way, Also, the organized crime is getting, let's say, industrialized. So Hezbollah provides an AML service to organized crime organizations to launder their money, for example. Will they do it only in the centralized finance system? Yes, of course. Will they do it also in the decentralized system? Of course, as well. It's all about sanctions evasion. It's, as you heard, if you put sanctions on the SWIFT system, the money will search ways around the SWIFT system to bypass the SWIFT system to find their ways in so-called havens. And it's maybe different to what Magnus said. There are havens out there, whether it's tax havens, whether it's havens for sanctions evasion. Because I think about Ukraine-Russia conflict or war, there's only 1/3 of the countries sanctioning Russia, meaning 2/3 are not sanctioning them. And if you have a global supply chain, or if you have a sort of a global financial system and you deal in this global environment, you have to think about your anti-financial crime system in a different way than only about this sanction or that sanction. It's putting up all the risks together. Of course, you have bribery and corruption, you have fraud, you have market abuse risk, and cybercrime activities, especially in the wallet area and especially in the decentralized finance area. And what is all about is the 3 dimensions of fraud. So you always have to have a motivation to, let's say, for some illicit activities. You need to have the opportunity to do so. And then you have, let's say, a rationalization of why you're doing it. Typically, let's say it's in Germany, when I'm discussing with non-financial services mainly, and it's about bribery and corruption, they tell me that it's not that long ago where I can deduct bribery, foreign bribery, from my tax statement. Which, first of all, is true, was 20 years ago or more than 20 years ago where that was possible. But that's a sort of rationalization, because you say, others are doing the same, so I do it as well. That's the rationalization. Well, I'm not talking about small criminals. I'm really talking about terrorist organizations or organized crime. And there is no, at least motivation is clear and rationalization is also clear. And it's only about opportunities. So what kind of opportunities do I have? What kind of opportunities is the system providing me to launder a large sum of money? And it's not about 10,000 here, 20,000 here. It's about each day multiple millions of a sort of a currency that I can trade and where I can get, let's say, it laundered or washed through the system. So now regulation steps in. Is that hindering innovation? That's what I heard a lot, especially in the cryptosphere, since 2 years. So if this fund transfer directive, if MiCA will happen that way, the German innovation for cryptocurrency will be dead. So first of all, if you start a regulation, it's, let's say, it's starting a few years ago with the discussions. And whatever is discussed in the beginning will never make it to the regulation at the end. That's something banks know. By the way, ISO 200-2020, it's the same issue. Everyone is waiting because everyone thinks about or is hoping that the deadline will be delayed. And that's the same thing for crypto as well and for the innovation here. But nevertheless, the question is valid, and we might need to have a discussion about that. But first of all, what's a regulation? So OECD defines this kind of a regulation. And from, I guess, an overall understanding about regulation is to make the market a little bit more fair. So it's to correct, so using a regulation to correct, let's say, developments that are most likely not fair to the society, not economical fair, or just political not wanted. And it's political not wanted, it's not a fair game. It's just the government saying, I don't want to have it that way, I want to push the market into another direction. So that's why sometimes compliance is just follow the rules and not thinking about does those or make those rules sense. You can discuss sanctions from a country to country level, the different sanction programs that are valid by the US, different to the European Union, different to UK, and how to handle them. But it won't help you, so you have to deal with those rules, so just face it. And Martin Wolf came up with an article about regulation and and how regulation can be effective. And his summary is, it's not working perfectly. There is no perfect regulation out there, not for the centralized finance and also not for decentralized finance. And there will not be a perfect regulation out there, even in the future. So don't assume that there will be one. So AFC, so financial crime within cryptocurrencies. There is a source of chain analysis. They came up with a report. And if I'm looking on the 2021 volume of illicit trades by illicit addresses, it's about $14 billion US dollar worth. Oh, that's nothing. Just think about that, the overall estimated volume of money laundering per anno is in between 1.9 to 4.8, to be correct, trillion US dollars. So it's not a significant value at the moment, but the regulators are stepping in because obviously there is some movement about sanctions evasion, there is a movement about tax evasion, and obviously also about organized crime to get money into the system. And if the market is growing, obviously you want to avoid that it's too fast adopted by those organized crime organizations. So there is a big opportunity for them to get into the system. It's not that easy to get the money out of the system, to be honest. It's not that easy as critics may have it look like. But NFT, so within decentralized finance, NFTs providing the highest opportunity, especially in the art environment, in the art market and art participant market, or art market participants, sorry for that. And that's firstly mentioned by UK, so by the UK regulation. And that's also something that I always hear when I'm discussing with crypto exchanges or VASPs, how unfair it is that you have different regulations by countries. So you might get an easy license in I don't know, let's assume you get it easier in France than in the UK. You will have it a hard way to get it in Singapore. So why is it different? So welcome to the regulation game. That's nothing specifically for the decentralized finance system. It's also valid for the central finance system. So It's this kind of compliance uncertainty that you have and that you have to face and that you have to handle the risk with. And there is a quite second topic that is important, and that's also valid for both worlds, whether it's centralized or decentralized, and that's this problem. You just see and monitor and track only a small fraction out of the whole volume. You need to know that this address is an illicit address. You need to know that you have a proper KYT in place. And by the way, zero knowledge proofs for that might work for some regulation, will not work for other regulations. So it's not a proper instrument if you would like to have it in place on a global scale. And it's about this blind spot and how to get this blind spot smaller, where we are discussing about how to battle financial crime more effective. And that's in both worlds the same thing. That's why we use machine learning to be more efficient, but also to be more effective. Find new patterns, find new typologies earlier than the regulator is coming up with new typologies, for example. It's really the idea to be ahead of the market. It's not to really build a best practice in compliance, because you will always argue we don't get paid for being best practice. It's just to have a good practice, and that's all about. But if it's really serious about risk management, you need to think about what kind of risks you have and how you handle those risks properly. You can have tools out there, chain analysis. I mentioned this report. Chain analysis is a tool provider. Crystal is a tool provider. So there are a few ones out there. There are more on the market that are available. But it's not only about the tools. It's also about how you handle those risks within your processes. And that's even more important than the tools, to be honest. And that's all about education and also about having discussions from practitioners with practitioners, and maybe not only between lawyers and practitioners. So it's easy to come across that whether it's centralized or decentralized, the hunting for illicit money flows is very important, and the regulation will focus more and more on that one, and you can assume that this will also happen in decentralized finance. So now about innovation. So if the regulator steps in, as I mentioned, there is a laser pointer. There is a sort of a, let's say, announcement phase. It's called consultation phase, where the regulator comes up with an idea, then everyone steps in and wants to get it moved in a specific direction, and then the regulation become valid. So if you are discussing MiCA and so on, I guess the discussion about that one is a few years old, so it's not really new. Of course it changed. But if I'm looking on the centralized finance system, the discussions are about within 1 year, and then you have to come up with a solution and you have to be compliant. So don't assume that those 2-3 years of announcement period will stay that way. You will have to react much more agile on those regulations if they started to become true, and if they started to follow also. Regulation is only one part, law enforcement is the other part. If you have strong regulation but a low law enforcement, it's somehow safe for the moment. That might change. But if you have a strong regulation and a strong law enforcement, then you better act immediately. Nevertheless, if the regulation comes in, typically you have some market participants that will not be able to follow those compliance those regulations and to stay compliant, so they leave the market. Maybe you have, but also the idea that new investors are coming in because now it's regulated, it's more safe to invest. And so on. So it's not really clear what is the cause and effect. So typically you have not only one cause, one effect, you have multiple causes, multiple effect chains here. But by different studies, you can have, let's say, a short innovation valley that comes after a regulation comes in. It's about 2 to 5% lower than it was before. And by the way, if you look on this cycle, and I'm not sure how familiar you are with the Gartner hype cycle, it's a similar way. So it's the hype, then it's, let's say, a valley of frustration, they call it, and then it reaches the plateau of productivity. So nevertheless, I think that regulation is the antipode for an innovative market is not realistic from that perspective. And I'm not sure if I'm looking on the actual regulation here, like whether it's MiCA, whether it's the travel rule, for example. I don't think that that really causes any interruption in innovation in this sphere. So it was, of course, always a big drama. Now we have to handle regulation maybe in a sort of way. But you continue your business and just have in mind some risks. You change some stuff, hopefully, and you always have to think about how decentralized can the business just continue, what kind of maybe centralized governmental institutions do I need. For example, you came up with a sort of a standard for adopting the travel rule. But the problem is that you have a lot of data garbage that you deliver through this interface. And there is no governmental party that ensures that if you, let's say, provide shit data, that you are somehow sanctioned by the environment. So not only by the regulator, but by the whole system. Like it is in SWIFT, for example. So there is an MT103. If you have the name in there, you're fine. If you don't have the name in there, you get sanctions by the system. Something similar might be needed and required somehow here as well. And if you ask me what is a fair regulation, and that's my, I guess, last slide, there are also because I know that some guys from BaFin are here and so on, and it's quite difficult always to come up with critics to the regulator. But you can think about those 3 dimensions for fair regulation, and then you can make up your own mind whether the existing regulations will fit to these topics. Just a few words. Prescriptiveness.
Dirk, I would really like to come here to an end. I'm sorry for interrupting, but we are already 5 minutes late, and we really need to stick to our agenda. I'm really sorry to interrupt, but maybe you can find an end. Yeah, definitely. It's the last slide anyway. So just to give you an idea, as more prescriptive you are as a regulator, as less innovation you are allowed. As less stringent your regulation is, as less innovation you are allowing. And as more clarity you bring in your regulation, as better it is also. And then bring those 3 dimensions together and make up your mind whether those regulations that you are facing at the moment are fair and will hinder your innovation or not. I think they will not, and so happy, adopt your business models and be successful. And if you need support in facing the right risk, managing those risks, and not only by tools but within the processes, just feel free to contact us.
We have a booth here. You will get the slides anyway. You get the key takeaways. Thanks for the time, and thanks for your interest.